Estes. I'm the co-founder and CEO of an early-stage Portland startup called Chroma. And we have been working hard to build a better way to buy and sell investment securities, which we are more commonly known as stocks and bonds, of the same sort that are traded on Wall Street markets. The unique thing about what we're doing at Chroma.Fund is that as of today, we launched not too long ago, the very end of October, you can visit this website and invest in not publicly traded Wall Street companies, but local concerns. We started with just a handful, kind of a pilot group of local companies that were willing to take a plunge with us and figure out what the local demand was for people investing not through their brokers or through their E-Trade application, but potentially just on a website. So I'm going to take you through some interesting stuff here, but importantly, we're all going to take a look at, in this room, something that we've not shown publicly before. And I'll explain the timing for this and what it's all about as we go. So the first thing to think about here is that in order for me to kind of deeply explain the fun thing that's happening when we're selling investment securities over a website to non-accredited investors, we have to think for a second about some of the boring regulatory stuff that keeps us all caged back from doing the things that we might want to do as startup founders. We've got features on deck that we're not legally permitted to push. And so the first thing to consider here is that this website was made possible by the state of Oregon. So we actually had to work, before we launched it publicly, we had to work for months and months and months, working specifically with a portion of the state that was commonly referred to as DFCS. And what that is essentially is it's the state version of the SEC. So a quick summary of history. Some of you may know this, some of you may not. First off, in order to buy any form of investment security through any party, the SEC has something to say about it. Generally, there's two categories of things that you can buy. They are registered securities, and those go through an expensive process to become publicly traded. So recently, when Atlassian, a software company, went public, that was a registered investment security. So a lot of the fun investing that we all kind of participate in inside of these smaller private stage companies are exempted securities. So most startup investment happens under the sort of umbrella of this idea. An exempted security, if you comply by the regulations, you're able to sell an investment in your company, like specifically to accredited investors. And that's just the way that specific form of exemption was created. So first the law comes, and then comes all the financial trade around it. So that 506D, Regulation D 506, that's the way that all deals get done at our stage for the most part. And it's been that way for quite a while. These laws date back to the 30s, and this is mostly the way capitalism works. You raise money from rich people until you get big enough to raise from the public. Okay, so we launched this website in conjunction with the state of Oregon because they made a new law. You can think of it that simplistically. It's actually a little more complicated. What we're doing here in Oregon is test betting a concept, which is that if we limited the amount that the businesses were raising, and also limited the amount the investors could put in, could we trust the general public to buy into an early stage company? So just like with gay marriage and with marijuana, Oregon said, let's just give it a shot. I'm going to accelerate you through some thoughts here, and we're going to conclude with the new stuff that we built. So the fun thing here is that this is our test bed. The entire country has officially been told that we will all be able to do this. All US-based businesses and all US citizens are going to have the same powers that we have here in Oregon as of next mid-May. That's called Title III of the Jobs Act. Hands up if you've heard of the Jobs Act before. We've all been talking about it for years because it was signed into law like in 2012, and it's taken them that long to figure out exactly how it's all going to go down. So given the business that we're in, better way to buy and sell investment securities, and specifically targeted towards small issuers, small businesses, early stage growth companies. Our response to Title III is something that we had to think long and hard. So how do we take what we're doing on a small level and take it upstream and go national with it? Well, I want to talk about a couple things here. And rather than pour you through a bunch of slides, you're going to have to listen to this is like the kind of crackpot freelance economist professor version of me rather than startup pitching. But a couple of simple, interesting factoids. As of today, there are just over 5,000 publicly traded companies in America. That number has been on the decline. In the late 90s, there were as many as 9,000 plus, and the number has been kind of dwindling. A lot of complexity as to why that's the case. It's just simply that's the way it is. So when you buy a stock a US stock, a Coca-Cola, Starbucks, you're buying out of a pool of about 5,000. There's an index called the Wilshire 5,000 that's kind of one way of looking at it. This is roughly what you can trade in terms of equities. Well, so there's an interesting number to note here is that another number is there are 28 million small businesses, if you define it by popular metrics. So you've got 5,000 of the big boys that have graduated up to a certain size where we can buy in and trade them. And then there's this massive pool of smaller issuers that don't get traded. It's just not even been legal to trade them. So another important number here to look at is the credit gap. So globally stated, the World Bank tried to figure out, so small businesses oftentimes, as they're trying to become bigger businesses, if they are, they oftentimes hit financing problems along the way. So the credit gap is defined as a company that has sought some form of a loan and not been able to receive it for whatever reason. Globally, the credit gap of the SME space is $3.2 to $3.9 trillion. And if any of you have ever tried as an early stage company to go to your bank and talk about your growth plan and what it would take to get a loan, it's very difficult. If you have the ability to securitize or to collateralize your house, if you have a massive revenue stream, it's a little easier. I'll tell you, Chroma actually sought a line of credit. Our accountant said, you should do this just in case you fall short of payroll. We were turned down in our first year of business, even though we had good cash flow, believe it or not. So if you look at the credit gap of 3.2 trillion and think of that as a problem that you might try to solve with software, one thing to look about is like, okay, so how might that get addressed by global capital? So global capital market investment, so that's the amount of money and holdings being held by global wealth for the most part, even though some individual investors are capitalized as well, that number is $282 trillion. Okay, so that is primarily money that has been committed to publicly traded sectors, the things that basically the Wall Street guys are pricing constantly all day long. So you've got small businesses that are desperate for capital, massive swell of global capital, and there is a bit of a gap there in between. Now, the thing is it's kind of rational because the capital, the large global capital, doesn't have a good interface down into the small businesses because they can't trade them. They don't even know how to get data that would be necessary to make informed decisions. So that problem in general is what Chroma is working on. So two quick observations, and then I'm going to unveil the next step in our answer to how to solve this problem. The first thing to note is that, well, let's look at what Wall Street actually wants. You can buy individual stocks. Your investment advisors, if you happen to get to the point of life where you need such a thing, will generally tell you to buy a fund. Because stock picking, which is when you pick one stock and say, I think this one's going to go over big, tends to ruin you over time. So the funds that have developed in order to solve this problem have been basically a way to buy into one thing and then get diversified across a lot of things. So this is the old school mutual fund. The hedge fund does some version of this. And then over time, there's been sort of innovation in the financial product space. Have anybody ever heard of an ETF? Does that ring a bell? You can buy into these things. They track stock market indexes. And the idea about an ETF is something we're fascinated with because basically the old school mutual fund guy is this smart old white guy with wire-thin glasses and amazing headshot. And he says, I'm going to manage your money. And the ETFs came along and said, we're just going to put your money in the market, broadly speaking. So we found that basically, okay, product market fit, right? So what if we have to make a product and sell it to Wall Street, help raise money for Oregon businesses, what do they want to buy? Funds is what they want to buy. So the version of an ETF that would represent local businesses, this version of our website will be going live soon. It's not public yet. That is a weird ringtone.
I know. You're running out of time.
Okay, so I'll speed through it. Okay, I thought it was someone just blowing up like today. We're marketing funds to Wall Street. Wall Street investors that have portfolios and they want to allocate them. They want safe investments, they want risky investments, and they want to get paid as an allocation depending on that. So we're picking local businesses that can exist inside of a sector that makes sense to a Wall Street investor. I'll take you through a real quick justification for something like a cider fund. It sounds kind of cutesy, but if you think about it, craft beer has been a big investment space. Americans drink more craft beer year upon year, and bigger breweries get bought up by larger companies. That sector has been at a huge growth. Cider is the early stage of the craft brewery scene. We do really well with cider breweries in Portland. We've got 40 plus of these that are still coming up, some of them in garages, some of them in later stage deployment phases. So basically, if you're an investment advisor and you have a client that would like to take some part of your capital, invest it locally, try an early stage consumable consumer growth fund, we have a way for them to put their capital directly into our securities without an actual entity that has to collect those funds. So there's a lot of complexity here about what that means, but we're building our work on what's known as a blockchain. So rather than have to work through these complex nets of brokers and settlements and all these things that happen, we've actually built a way for them to invest directly. We can securitize or measure their investments on the blockchain, and someday very soon we'll actually hope to be able to help them trade those investments. So the same feature set that they get out of an exchange-traded fund has been a massively popular product. We've got potentially tens of millions of new publicly traded companies coming online. We've got 5,000 today, there could be millions tomorrow. The interface between global capital and between this last mile of issuers of securities is Chroma.Fund. So what we're specifically doing is vending our software to broker-dealers who might be able to roll up these sectors, see which investors want to get invested in local impact funds, local sector-driven funds, and again, they can be distributed nationwide. And then at that point, we're going to try to see how much of that global capital wants to pour into our local companies. So thanks for listening here. Stay tuned. We're going to be pushing this stuff out publicly. And if anyone is in this room is representing a small issuer that could potentially use a little bit of extra fundraising, specifically through debt, we would look at equity, but there's some complexity there. Please do hit the website, hit the contact form, reach out to us. Thank you very much.
Thank you. More time because I wanted to hear the whole thing.
Yeah.
I'm sure regulation is something that's popular for everyone, but this is a really cool idea. Thanks for sharing. Sorry we don't have more time for questions. So do you have a straightforward one?
Yeah,
Okay.
in a nutshell, how do your reporting requirements change when you do one of these Reg D offerings?
So the Reg D offerings are the same as they've always been. Basically, there are some disclosures that you make to your investors. So these are specifically either OIO exempted or Title III exempted. They do have increased disclosure requirements, but they're pretty easy to deal with. You have to share reviewed financials, not audited in most cases. You have to be on the hook for narrative business updates to your investors. All things are really kind of good practice to do anyway. So we were happy with the regulations. It didn't end up being a huge deal killer, we think, for the industry. And then
So we say that Chroma.Fund wants to be the last mile to investors. How are you planning to market this to get some of that $282 trillion?
Importantly, we won't be doing the marketing of financial products because that's really strictly regulated. We're going to sell this kind of sexy startup software to a class of people that don't have very good software to pull this off now. Those are registered broker-dealers. So they're able to actually hop on the phone and recommend an investment in a particular sector. So we're just going to be the tech guys that help them pull it off.
Perfect. One more, Michael.
So I know there are companies like Wire that allow people to invest in startups, but you have to have like a $200,000 income or something crazy like that. Are you able to get around that because you're organ only? And will that change in May and now you'll be like your competitor?
That's right. The absence of the accredited investor qualification for this exemption is the mind-blowing new thing about this stuff. And it's really the biggest change in securities law since the 1930s. But every citizen will be able to invest.
Beautiful.
Cool.
Thank you
Thank
so
you.
much.